Hello and welcome to this short presentation on cash flow. Over the next couple of minutes we'll go through together some simple ideas that can help you improve the cash position of your business. Every business owner knows cash is king, but there doesn't seem to be much in the way of practical advice available to business owners on how to monitor and improve the cash position of their businesses. It really is the practical aspect that's the most important issue here. There's little point in knowing a number of business theories or perhaps being able to answer exam type questions. What you really need is advice that can help you in the real business world, and that's what this presentation seeks to address. The cash cycle really is a simple idea. In this example, the business has bought some goods on the 1st of January for £100. The £100 was physically paid to the supplier on the 1st, so at that point the business is down £100. The business then sells the item to a customer on the 20th of January for £175, but this is a credit sale, so the business doesn't get paid by the customer at that point in time. In fact, it's not until the 19th of February, when the customer settles his invoice, that the business receives the £175. The time delay from the 1st of January to the 19th of February is the cash cycle. The £175 that's been received is now available to buy more goods which can be sold, and the cycle continues. Even with this simple example, there are two pitfalls to look out for. Number one, at the 20th of January, the business is showing a profit on paper, but in cash terms, that profit isn't realised until the 19th of February. This is an area where many business owners can get confused. If accounts were prepared at the 20th of January, the business will show a profit of £75. There will be tax due on the £75, but the business owner won't have any money at that point in time to settle the tax bill. This interaction between paper profit and cash profit is incredibly important to understand. The second pitfall to look out for is growing too quickly. In the example, the business had to fund the £100 cash position for 50 days. This money may have come from an overdraft or maybe cash reserves, but what could happen if the business grew too quickly? Imagine there was enough customers that the business could justify buying £10,000 worth of goods rather than £100. Firstly, can the business afford this? Secondly, can it pay its other costs during the period of time that it's waiting for its customers to pay it? If it can't, then again on paper, the business results may well look fantastic, but the business may collapse as it's run out of money. Now, let's look at the same example, but let's move some of the timings around. The business still buys £100 of goods on the 1st of January, but this time on credit. Let's say they have a 30-day payment arrangement, so the business doesn't have to physically pay the £100 until the 31st of January. Again, the sale is made to the customer on the 20th, but this time the customer pays cash at the time of sale. 11 days later, the business pays the supplier the £100 that it owes. Right, first of all, on paper, both examples are identical. Goods were bought on the 1st for £100, a sale was made on the 20th for £175, but, and this really is the critical point, the cash flows are completely different. In the first example, the business had to fund the £100 cash deficit for 50 days. In the second example, the business receives full payment from the customer before it has to pay its supplier. This means the business in the second example could expand very quickly without any cash worries at all. I hope this is starting to make sense. In both examples, the paper profit is the same, but the underlying cash movements are very different, and this has a massive impact on the potential success of each business. So, in summary, the critical cash factors in your business is the length of time between when you pay your supplier and when your customers pay you. That time gap needs to be managed and be as much in your favour as possible. And incidentally, the difference between the amount you pay your supplier and the amount your customer pays you is determined by your pricing and margin strategy, but that is a topic for a separate video. Right, I promised you some practical advice on how to improve your cash flow. We learnt on the last slide that the amount of cash you have in your business is determined by a combination of how much you pay your suppliers and when you pay them, and also how much your customers pay you and when they pay you as well. Therefore, to maximise the cash in your business, you need to focus on these 4 areas. Number 1, obtain the most competitive price you can for the goods you buy, without sacrificing quality. Number 2, delay paying for those goods as long as you can, but within agreed credit terms. We're not advocating here that you pay people outside of the credit terms that you've agreed with them. Number 3, charge your customers as much as you can for the goods. However, remember that customers expect value for money. And number 4, make your customers pay you as quickly as you can. All cash flow strategies will fall into one of the above categories. Do you agree that's simple and logical? Minimise the cash payments you need to make and delay paying those payments as much as possible, while at the same time maximising the cash receipts you receive and receive them as quickly as you can. Right, so let's take a look at some practical ideas that make this possible. The key to negotiating with suppliers is leverage. Suppliers aren't going to reduce their price or extend your credit terms without good reason, so you need to give them something in return. That's where buying groups can be so successful. If a group of businesses band together, their combined needs would be a very attractive proposition to a supplier, and a good deal can be struck. Also, you may be bidding for a number of lucrative contracts yourself. If you win them, this may result in you being able to put much more business the supplier's way. It's these sorts of ideas that can really strengthen your bargaining position with your suppliers. It may surprise you, but for most customers their main focus is value and not price. They want a great product, and they also want fantastic customer service, and they know at the end of the day that costs money. So look at ways of increasing the value of what you offer your customers. This doesn't mean you need to spend a fortune either. There are many low cost or indeed no cost things you can do that your customers will appreciate. It can be simple things like, for example, a tea or coffee while they wait, or maybe a free add-on service, that sort of idea. This is an area that can really boost the success of a small business, and it's also the subject of a separate video. So, how do your customers currently pay you? Could you use any of the ideas that are shown on the slide here to get paid quicker? The VIP scheme is a great plan that many businesses are using at the moment. The idea is that rather than customers paying as and when they visit the business, they pay a fixed amount per month, and this entitles them to so many services throughout the year. Often access to extra discounts or packages are offered in order to increase the value to the customers. The main advantage with these ideas is that you receive regular monthly income, and this is often received in advance of actually providing the service to your customers. A cash flow problem or mistake is anything that works in the opposite way to what we've gone through so far. So anything that delays customers paying you or speeds up when you have to pay your suppliers will have a negative impact on your cash. The worst mistakes of all are numbers 9 and 10 shown on the slide there. If you're not aware of cash flow issues and you're not managing them at all in your business, then you can't possibly improve them. So there we are. That's the cash cycle. As a final word, make sure you understand how your business cash flow works and try and improve each step in your favour. Remember, even small movements in your favour can have a huge impact. If you keep working at this and move forward every day, then over a short period of time you will see significant improvements. And if you need help with this at all, please do get in touch and we'll do all we can to help. I hope you've enjoyed this presentation, but but more importantly, I hope that it has given you some ideas on how you can improve the cash position of your business. If it has helped, please share the presentation with anyone you know that might benefit from it as well. I strongly believe that as a business community, if we help each other by sharing information, then we can all be successful and prosper, and that's really a worthwhile ambition to aim for. Please feel free to comment on the video, and if you've got any questions, I'll do my best to answer them. So that's it. Thanks for watching. Have a great day.